Hello everyone, hope you all are well. Today we are going to discuss the topic of accounting cycle. So let's move on to our topic without wasting time. Basically, there are 4 steps in accounting cycle. Number 1 is recording. Number 2 is classifying. Number 3 is summarizing. And last one is interpreting. So now we will discuss these 4 steps one by one. First one is recording. Recording means writing something down, so that they are available on time as an evidence. Now the question arises, which item will be recorded? Transactions. Yes. The process of recording day-to-day business financial activities is the first step of accounting cycle. Transactions are initially recorded in day books or general journal, books of prime entry. Basically, books of prime entry is an alternative name of day books and general journal. Next, written evidence or proof. This is very important in the recording process of transactions. Without it, transactions are meaningless. This means that the transaction is of no importance without written evidence. Written evidence is also called a source document in the language of accounting. The most important advantage of this is that the chances of fraud are greatly reduced. Let's see which transactions are recorded in the daybooks and which is recorded in general journal. Routine activities such as sales, purchases are listed in the daybooks. Similarly, unusual activities such as acquisition and disposal of non-current assets are recorded in the general journal. For example, purchasing plant and machinery for production purposes and other fixtures and fittings are unusual transactions that do not occur on daily basis. So they must be recorded in general journal. Next point is that, in daybooks, transactions are recorded through single entry concept. And in general journal, non-routine activities are recorded through double entry concept. Here are some examples of daybooks. SDB, Sales Day Book. It recorded all credit sales. Number 2 is PDB, Purchase Day Book. It recorded all credit purchases. Next, PCB, Petty Cash Book. It recorded small expenses of a business. And CRB, Cash Receipt Book. It recorded all cash receipts from cash sales and receivables. In addition, there are other daybooks that are not mentioned here. It was all about recording process of transactions. Next, step number 2 is classifying. Recorded transactions are posted in their relevant T accounts in general ledger, also called main ledger or nominal ledger. T accounts are basically T-shaped accounts in which similar transactions are posted, such as all sales transactions are posted to the sales account, as well as cash, receivables, payables, expenses, incomes, etc., are posted to their relevant T accounts. This process continues throughout the year, and these accounts should be balanced off at the end of the accounting year. And their results are drawn, which is also called the brought downs or closing balances. Step number 3 is summarizing. In this step, first of all, we prepared a trial balance with the help of brought downs or closing balances generated from T accounts. Trial balance. Basically, it is a mathematical accuracy of double entry bookkeeping system, which confirms that the last 2 steps of recording and posting our transactions have been performed correctly. There is a duality concept, which states that every transaction has a dual effect, debit and credit, with the same amount. Due to this concept, the accounting equation will remain balanced after every transaction occur in a business. So, here is the structure of trial balance. It has 2 columns, debit and credit. Due to duality concept, which is already discussed, trial balance will be equal after putting all closing balances. After preparing a trial balance, the next point in summarizing is to prepare a financial statements that describes business performance throughout the year and business financial position at a point in time. Basically, There are 5 financial statements, which are prepared at the end of the accounting year. These are SPL, SOFP, SOCIE, SOCF, and notes to the accounts. And finally, after preparing a financial statements, we reach the final stage of the accounting cycle, which is interpreting. At this stage, we plan our future based on our business's past performance and current financial position. After planning, we make decisions and strategies to achieve our future goals and objectives. It was all about the accounting cycle. Hope you understand this. If still you have any confusion related to this discussion, then leave a comment, also like, share and subscribe. See you in next video. Thank you.